very good afternoon. Ladies and gentlemen, esteemed delegates. I hope you all had a hearty lunch and you're all back full steam for a great afternoon session. All right, so we have the full panelists on board. All right, let us get started. Again, a very good afternoon, ladies and gentlemen, esteemed delegates. A very warm welcome to the ASEAN Banking and Fintech Summit. It's a pleasure to have you all join us today. As we gather here for this significant event, we embark on a crucial conversation centered around sustainability in banking and finance, a topic that is not only growing in importance, but increasingly urgent in today's dynamic landscape. Right, so our session titled Sustainability in Banking, Scaling Up ESG and Sustainable Finance aims to delve into the heart of sustainability initiatives within the banking sector and explore strategies for amplifying ESG practices along with sustainable finance endeavors. In our session, Sustainability in Banking, Scaling Up ESG and Sustainable Finance, we are privileged to be joined by an esteemed panel of experts who will bring a wealth of knowledge and experience to the table. Allow me to now introduce them. Firstly, we have Dr. Haji Mazlan, the visionary founder of Mazi Group of Companies. With over 2 decades of experience in the banking industry, Dr. Mazlan's commitment to Islamic finance and social entrepreneurship has been instrumental in advancing sustainable economic development both locally and internationally. Next, we have Benjamin, the visionary founder and managing director of STACS, Asia's leading ESG data and technology company. Benjamin's innovative work has been pivotal in driving sustainability initiatives across various sectors and particularly within the financial domain. Next, we have Paneerselvan, the assistant director at APPGM SDG Secretariat. With over 16 years of dedicated service in social work, Paneerselvan's expertise lies in sustainable human capital development and impact monitoring, making him a crucial voice in today's dialogue. And finally, we have Arina Kok, our very highly recognized sustainability expert in the marketplace, a partner at EY, an integrated reporting sustainability subject matter expert. Arina's extensive experience in sustainability consulting and stakeholder management has played a pivotal role in shaping the sustainable strategies in numerous organizations. And so with that, together, our panelists represents a diverse spectrum of expertise, and I'm certain that their insights will enrich our discussions today, addressing critical issues surrounding sustainability, exploring key strategies, and on sustainable finance initiatives. Well, for a start, let us hear an opening remark, just about over 8 minutes maybe, 8 minutes, on what does it mean for each of you as members today on the panel, on what does it mean by scaling up ESG and sustainable finance? Let us start with Dr. Mazlan, please.
Okay, a little bit background about who I am so that I can share for the right context setting of our topic this afternoon. I was with Central Bank of Malaysia for more than 20 over years. And my last tenure, I was the head of enforcement. So as a central banker, as head of enforcement, I can see a lot of compliance and governance issue. Therefore, after my stint with government as a regulator, then I joined commercial banking group. And then I was made to become the first head of enterprise governance. This is where I started knowing the behavior of the commercial banking industry. So I have 2 hats to play. So how I strike a balance between business governance, which is talking about performance, dollar and cents. Yeah, Datuk Nora. And how about corporate governance? Is all addressing issue pertaining corporate governance. Is all about conformity. So at the end of the day, yes, we are talking about corporate governance, but if we do not perform, there you go. Nothing makes real in our daily life. So what I'm trying to say here now, yes, everybody agreed that we cannot only concentrate on corporates, which is commercial based. We have to have a balance with social requirement. This is where my past experience tell me, yes, in order we to become unicorn company, not only to serve Malaysian market, but the whole global, we need to have a striking balance between commercial and social. This is where we are talking today about ESG, ESDG, but in my small group of company, we have been talking about wakaf. So, inshallah, I would like to share with you, we have started the wakaf ecosystem. We don't rely on the government funding, we create our own funding. That's why I would like to share again with all of you here, because we know in order to get a good funding, we must get involved ourselves with market. What market here? I'm talking about capital market. Yes, we are going to get listed soon. Not in Malaysia, but I know Malaysia, not to say Malaysia is not good, but as a business, we are talking about liquidity. So we going to get listed in Nasdaq capital market. Yeah.
Great,
So kudos to our group, Richwood Ventures Berhad, PNP, Cumis Investment Bank, and so on and so forth. But what I would like to say here, yes, in my group, it is compulsory that we must first pay zakat. Secondly, we pay for our contribution for wakaf. So wakaf, the beauty of wakaf is that this is what we call circular economy. So nothing of the society members now today, we're just talking about financial inclusion. Yes, digital banking, one of the main purpose is to financial inclusion, which is to serve the unserved market, to serve the underserved. So in my group, yes, every month we contribute wakaf, every month we contribute for our wakaf capital. That means today the business is all about, in order to become sustained, we have no choice. But the first, we must address about how we can become global provider. Product, services is always market outlook globally. Second, like it or not, we must embrace our technology, digitalization. Therefore, if any one of you want to experience digital banking without bank, yes, we have the platform, we have the system, we have the e-wallet, we have the payment system gateway. So this is where what makes us different from the rest, because we coupled with enterprising. While you become our members, you are also entitled for passive and active income as wakafpreneur. Not ordinary entrepreneur, but wakafpreneur. That means whatever that we have, we plow back to our society. So I think for the start, thank you.
Thank you, Dr. Maslan. Great developments for social impact. Over to you, Ben. What does it mean for you on ESG, scaling up, and sustainable initiatives?
Thanks. First of all, it's a great pleasure to be here. It's been a while since I was in KL, but I'm always happy to be in Malaysia because we are, although I'm from Singapore, okay, but we do see, sustainability as a very interlinked topic. Okay, so actually, you asked the question about what does it mean to me, right? So, sustainability in banking or financial services, while we talk about the banks, as you are talking about the banks the whole day, one interesting thing about the financial sector is that it serves every other sector. So we cannot steer away from the real economy, even when we're talking about this sector here. And, when we talk about the real economy, there's this alarming statistic that strikes out to me, which is, I read this paper in November last year. Unfortunately, it's a KPMG paper. But anyway, it states that 75% of large companies today are not able to meet ESG regulatory requirements. 75% of large companies are not able to meet ESG regulatory requirements, which means that all of them are not compliant with regulations today. And why is that so? Okay, because as I mentioned, sustainability is an interlinked topic, right? These large companies have their regulations because the regulators have put them in, because the governments have put in their net zero targets for 2050 or 2070, right? So everything spills over. The governments have set a standard, the regulators have set the rules, the large companies are always the first to be implemented on, especially the financial sector and the listed companies. And yet, all of them are, no matter where they are from, no matter they are in the EU or in the US, they are procuring goods, and these come from Asia. Everything we eat, drink, consume, wear, actually ultimately comes from Asia. So more enablement needs to happen here. Right? So if you go all the way top down again, government to regulators to large corp, and getting the procurement for the SMEs and the supply chain, I feel we need more enablement here. Okay, so and of course, if you go bottom up again, these SMEs usually do not know quite yet how to start. So I'm actually quite inspired by the term wakapreneur, right? Wakachopreneur, yeah. So which is where the inclusivity of the society, okay, of everybody would be able to, okay, bring everybody together forward. As to what we see as our company, because our company developed a platform called ESGpedia. It's a technology platform, right? So ESGpedia, as the name suggests, is meant to be a Wikipedia for ESG data. And this name has very big shoes to fill. So of course, ESGpedia is not just a single country, it's actually a regional data platform. So we started in Asia. We feel that we need to enable Asian companies. I don't care whether they are large or small. We know that companies here have their own regulations to abide with. All right, there are 7,700 listed companies in the 6 main ASEAN markets, plus Hong Kong and Taiwan, which is where we operate. Right? So these countries have 7,700 listed companies. All of them have a supply chain of a few hundred to a few thousand companies, and we have to enable all of them, okay, at scale. Because the financial sector took about 100 years to regulate to what it is today. Right? Double entry accounting system has been around for 2,000 years since the Romans started to sack the entire cities in Europe. But it only established the standards in the last 20 or 30 years. However, for sustainability, we have only 5 to 10 years before all the regulations in the world are implemented. And that's where there is a massive scale of a problem that we need to fix, and only technology can do that. So our role is to deliver a platform, okay, has all the digital tools enabled. It's actually free for most companies because it's ESGpedia. Just like Wikipedia, it is free for many people. Right? So that's what we really want to provide from the ground up. Okay, and hopefully, coming back to banking, okay, hopefully the financial sector can now play a bigger role with all the data enabled through technology to be able to deploy capital, okay, and enable more companies. Thanks.
Lovely. Thanks, Ben. So inclusivity of the ecosystem is crucial. Right. Over to you, Pani.
Thank you, Mr. Suri. Okay. So I think I'm the only one who doesn't fit into financial expertise here. I came from social work background, okay, but thank you for the opportunity. So in terms of, I'm here actually not to tell you what to do, but just to give you a suggestion and what can be done in Malaysia as a sustainable finance as well as the ESG is concerned. So the organization that I'm coming from, APPGM SDG, is actually a parliamentary body where we do issues mapping among grassroots communities, and we take up small-scale micro projects with the communities on the ground. But through our findings, we came to know that the need for microfinance among people is at large. Okay? The need for financial literacy and also digital inclusion is actually a lot, and we need to address all that. So coming back to actually the topic, I'm actually suggesting 2 major groups where the financial institution here can actually address and take up as part of your beneficiary in terms of the ESG as well as the sustainable finance in your organization. One is the MSMEs, the micro, small and medium SMEs, and another is the grassroots community. So before I go into the 2 major groups, in terms of our MSMEs or SMEs, there are actually a few references I wish to actually note here, where a study by Alliance Bank, a survey, actually pointed out that most SMEs are actually ready to take up ESG framework and agenda towards their sustainability and so on in business. But the major challenge is actually their resource constraint. And there's one article in the Star Daily lately, 1st March 2024, that identified that growth of our SMEs in Malaysia is actually stagnant due to lack of affordable credit. So these are actually areas where the microfinance, okay, is the key, but it's still lacking. It's not available to these small companies, because SMEs in Malaysia, 90% of them are actually micro. But we, out of our 1.1 million MSMEs, 900,000 are actually micro organizations, and insufficient cash flow, lack of affordable credit are their main concern in terms of them going into ESG as well as the other sustainable agendas and so on. So this is where actually the financial institution here, as well as the Fintech institutions, can come forward and actually address the issue in terms of giving, one is microcredits to the organization. Second, before giving the microcredits, we have to build their capacity in terms of managing the microcredit. So that's where the financial literacy and so on need to be coming in. I think both for SMEs as well as the grassroots communities. So this needs to be done, and I think the organizations here can actually take up this through the foundations that you have. Like big banks, we have foundations and so on. You can actually really take up programs that is tailor-made to financial solution, rather than doing broader idea of projects. We can really focus on uplifting the financial capacity of people, where I'm seeing, like, if let's say we can actually empower 900 micro SMEs into a bankable person, it's going to be a very big market for banks in terms of loan servicing, then other financial services and so on. So, but getting this done is actually a Herculean task, which I think the bank foundations are actually able to actually take up to do this as part of their ESG as well as the financial sustainability. So that's for the MSMEs. And in terms of the grassroots communities, from our mapping also, APPGM mapping, we found out that people are actually really financially resilient, you know. We can take one example. They used to take loans from loan sharks, okay? So if you ask me what's the qualification to take a loan from loan shark, okay? I would say they're actually really brave enough to take the loan. Otherwise, if you don't pay, then there's actually very high repercussions you are facing in Malaysia, actually. But they still have the resilience to take the loan and pay back. I think in terms of their credit score, although they don't fall in the official credit score that we have with our financial institution, but in terms of they themselves, they're actually more than eligible to pay back the loans they take from our institution. Just that, as we say, we need some capacity building to them in terms of financial management, forming a company, getting a bank account, and using the proper channel to get up the loan. And these are also microfinances. I think the role of financial institution here is key in supporting these peoples, the micro-organizations, the grassroots communities. There are some even cooperatives, like what Dr. mentioned just now, initiative through Zakat and so on, can be introduced to them. So, so my point now is actually the financial institution, through your foundations, through your philanthropy arm, can really focus into upgrading people's financial capacity, making them as a bankable and a loanable person, which eventually will help in your business as well. So that's my point of view. I think, thank you.
Thanks, Manir. Lovely. That's some good insights and angle across micro-financing and across vis-a-vis micro-organizations. Lovely to hear. Circling back to our final panelist, Arina, what's your view, Arina? Sure. Should Rina take the rostrum to present us some slides?
Thank you, Kasturi, and everyone from KSI. First and foremost, I think after lunch, it's always good to have some slides so that it captures some of their attention as well. Today, I think the part where I would like to go through is very short, 10 minutes, but very much going to be focused on 3 areas. So how the banks and FIs can advance sustainability and the ESG agenda. This is no longer a new area, but how do we then move ahead? What we're seeing today. Second is, what are the opportunities in sustainable finance? A lot are talking about green, but more often moving towards transition, and some are looking at bridging towards some of these projects as well. And the last one is, what are the challenges in managing the climate risk? Now, this is the cause of inaction that we have to consider and think about. So I think first and foremost, when we talk about what are the landscape that we're seeing today, if we look at the diagram on the circle on the right-hand side, we do have planetary limits. That's where our resources are finite. To a certain extent, at the bottom, you see societal needs. So where the financial institutions comes into the play is to really consider what are the ESG criteria when you are facilitating capital. And what's important is, if you look on the left-hand side, why this is important. The first one is the FIs have a huge task to embed some of these requirements into the decarbonization on capital allocation and decision making. So you actually have the power to do it. Second is, when you integrate these efforts into a just transition, 2 areas that will increase is very much on the importance, not just to planet, but society. Think about it. For all the organizations that are putting up statements, risk statements on coal or moving away from fossil fuel, how many have started discussing in terms of what are the potential stranded workforce that comes with it? So what it means is the future of financing is not only to move away from brown or fossil fuel, but also to ensure there is a just transition of those engineers or those mechanics that's working on coal plants, moving towards greener plants, or at least if there's a transition to gas plants, there are certain capability when we talk about what are the transition. And last but not least is, it is also motivated by the risk of threats of stranded assets. In Malaysia, all of us are fully aware, green buildings is coming up, but more conversations are going to be on stranded buildings. So as more and more offices move towards green buildings, one of the key criteria data statistics that most FIs will start to monitor is, what are the ghost buildings? Where are the stranded assets that are not generating revenue? And not only that, but also the risk of greenwashing and what are the moral responsibility. So the next part is we want to mention is in terms of how ASEAN FIs can advance this, considering the COP28, what we've seen is there has been significant expansion, but what's important is to think about where are the public-private partnerships. As you see, there will be important collaborations. Some of these syndicated loans consideration for us need assets, and some assets may not be, they require certain pre-financing. And these are things that not the conventional credit terms or credit evaluation a bank by itself would be able to navigate. So there are certain constraints the ecosystem needs to navigate, including things like bridging, syndicated loan, limit setting, and consideration. So what we are seeing here is, and understanding the constraints, there will be a financing gap and how to scale financing, and what are the standards frameworks for everyone to go towards an organized transition manner. So when it comes to the opportunities for scaling, what we are seeing is in terms of the areas, or at least what we are seeing is the dedicated purpose financing has always been focus areas on FIs, general purpose financing, but more often is going towards transition financing and trade financing. Where are the areas? And quite a number have started to look at not just transition bonds and transition loan, but also sustainable supply chain financing, which we believe will gain attraction. But what's lacking is infrastructure to monitor the supply chain statistics and data. Now, this will come hand in hand for organizations that already demand ESG practices and performance of large multinational. Of course, the question is, what's in it for us? You will be able to drive supply chain strategy and have a broader set of customers, not just the initial customer that you're working with. So the green and sustainable trade financing and supply chain would be the focus areas that we see will be a boom as well. Now, the next part is when it comes to the labeling, this is a huge challenge in not just Malaysia, but cut across all jurisdictions. how do you ensure the labeling is sufficient? Is credit or certification sufficient, green building certification sufficient, or do you need more specific data like emissions that actually needs to come against this green label or sustainable label financing? So when it comes to the next part is, there are many more products available across the segments under the wealth or asset management, capital market, wholesale banking, consumer banking, and insurance. As we see what are the options of E, S, and G, we will then recognize that there are interconnections, but to a certain extent, at least the E part, the advancement to actually start having some of these monitoring mechanisms have been put in place, where the S and the G interconnectivity will also come in. So the next part is we want to talk about what are the challenges and opportunities. In terms of the opportunities, we all know that it will create 30 million jobs in ASEAN, 170 billion, especially if we look at the areas, clean energy, hydrogen economy, NETR, NIMP. These are the statistics that we see on hand. But what we want to know is, within the ASEAN market, who is doing what, and whether the disclosures of these will support the transition of the financing. So when we look at the landscape between Malaysia and cut across all countries, we're doing not too bad, but I think we need to up and to a certain extent understand. Because if you see here, why Philippines is actually doing further, they are pushing on certain agenda like plastic and traceability. So at least that's where they're going for a circularity, and a lot of projects are also hinge upon volumes as well as what are the ROI when they actually look at some of these policies. So the next part is when we think about what are the areas you can mobilize, ASEAN banks can mobilize the finance on green projects. These are the common ones. But the next one is the more important one, which is on transitioning activities. Now, caution is when you go for transitioning activities, it's important to understand how these are actually, the report card can be developed when it comes to areas or sectors like iron and steel, transport, low emission fuels like sustainable aviation fuels, bioenergy, electrification. These are not conventional, the ones that you can just get a certificate and then you go for transitioning. So last but not least, the areas to focus is really considering the barriers and challenges. These are the 5 things that for all FIs, they have to tackle, and the intention is really to tackle in a coordinated manner. What we are seeing is a lot of corporates are getting different due diligence questions from different banks. So that is the problem of what corporate Malaysia and ASEAN is facing. Even with the Bank Negara issuance of due diligence questionnaire, the level of granularity of how each bank assess each finance is also different. So the last one is, if we want to ensure there is a harmonious and standardization, there are already existing sustainable label financing and green label financing that can help us to align and ensure that these are good quality projects and financing with clear impact to be reported. So with that, I think I'll pass back to Kasturi.
Sure, thank you. Thank you, Arina. I'm sure the participants are going to be asking you for a copy of the deck, of the slides. All right, so now with that, whilst we await for questions to flow in, participants, feel free to send us your questions as we get rolling in. Let us start with the first question, right? And let's circle back to Dr. Mazlan. How do you perceive the current state of sustainability integration, right, with the banking and finance sector, particularly in the ASEAN region?
Personally, I think in terms of penetration rate among the banks is very encouraging. Why I say so, you can go to any banks, they are more than willing to help you, at least to share information, what sort of green financing, for example, available to them. So what more interested, we have all kind of company now coming to Malaysia to share about ESG roadmaps. So I'm very happy to see this new development. Therefore, I would say we have no choice, but we must embrace ESG into our culture. So much so that today, if I may share you something, everybody are talking about food security, right? All kind of crises, rice crisis, now sugar crisis, even telur crisis, But when we talk about food security, somehow or other we lost something more important, urgent for us to address. That is climate change. You just imagine we have a huge paddy field, but what happened? Our mother nature, suddenly he want to cry, raining non-stop every day. What happened to paddy field? Flooded, all paddy field die. And similarly, the sun want to laugh all the way around, every day, all year round. Then we have dry season. So what happened to our paddy? Die again. Therefore, that's why in my technology groups, internationally, we address how to sustain for our food. No other choice, but we have to address the first issue, that is climate change. So what is our solution? So the solution is all about greenhouse plus red solarized solar panel. You can Google. This is what we are talking. Therefore, my group has put quite a lot fund of money to invest into climate change, and of course, this climate change entail into production of foods for all of us to consume. So then the question comes, where do we get the finance? Again, this question, I'm very happy, not because my background, ex-Bank Negara, I have my own bankers circular, circle, whether in Malaysia or abroad. But I want to say this, the moment we have a very clear vision, what we want to achieve in our life, surely when we engage with the banker, they will advise us 2 modules. First, yes, you can go this route, commercial banking. But I want to say here a very important message. The social finance is bigger than commercial finance. So this is where, in our Wakaf ecosystem, you will be quite surprised. Many philanthropies, yes, Dr. Mazlan, how much do you need your project for climate change and food security? Take it. I asked Tan Sri, do you expect any return? No, I don't need any return. My return is tomorrow I die, I will go into paradise. Tomorrow I die, all the society are very happy. At least I have contributed to the society development. That's why I just want to share, yes, until today, we are still fighting to establish the one and only Datuk Nora Bank Digital Wakaf. Not only to serve Malaysian market, but eventually Bank Wakaf Antarabangsa to serve the global needs. So that is the 2 things. But the third thing is, actually, I'm also involved with LOPSA, with the government MOF, to establish Iskandar Malaysia as international financial hub. You see, looking at all the financial hub, usually the neighborhood will get the spillover effect. But unfortunately, Iskandar Malaysia, as we know, now bleeding. Benjamin is bleeding. So when Kebawah Duli and also Johor State asked me, Dr. Mazlan, what do you think? How to address the issue? I said, use Iskandar Malaysia as Corporate International Islamic Financial Center. Then I said, I'm very confident, year 1, when we gazette as International Financial Center, 10% of not only about the fund, but 10% of the player, businessmen will come to Iskandar Malaysia. Thank you.
Definitely. Some excellent sharings by Dr. Mazlan. Thank you for that. Back to Benjamin then. Now, what about, again, current state of integration? You may want to focus on the ASEAN region if you'd like.
Yeah.
Go ahead.
But firstly, I will go to Iskandar more often now. Yeah, and I also be very grateful for every egg I eat in the morning. But anyway, to the question, right? I think actually I'm very optimistic, just like Dr. Mazlan. I'm very optimistic and very excited because I think to the question about ASEAN banking, actually, if you look at the state of sustainability, banking is always the most regulated sector in the world, and therefore the most fastest to comply, with the international regulations. And banking also plays a very important role because, I've been speaking about compliance so far, right? But actually, how do we move ESG further ahead is not through compliance, but through incentives, right? So, because, let's face it, the SMEs are not regulated. They are not listed. They do not need to abide with any regulation. And any regulation that we read today, none of that is for the SME. So there's this disconnect. Large listed companies are regulated. SMEs are not regulated, right? So that's where there needs to be this kind of like, something for everyone, which means somehow the large companies need to dangle some incentives to the SMEs, okay? And that's where, so far, we have seen that in ASEAN, banks have been willing to embrace in various types of products, like Arina also just showed us just now, which includes supply chain financing, sustainability-linked KPI loans, okay? And that's where we have really seen the impact, because these benefits spill over to the suppliers. Now the suppliers get paid faster on the credit of the large corp, okay, as long as they are able to establish the sustainability track, okay. And of course, the sustainability-linked loans, by the way, okay, just in case people are wondering, what's the benefit, right? The benefit is that we have seen, okay, banks providing interest rate discounts of as much as 20 basis points per annum of the interest of the prevailing interest rate, which means that if you are borrowing 10 million, no matter what currency you're talking about, 10 million, 20 basis points simply means 20,000 savings every year, right? So that's where there's a very tangible benefit, so that the SMEs now understand that, oh, there is this ability to go green, comply with whatever the buyer is asking me to do. At the same time, I have an incentive, okay, that I can see real monetary return. So I think that's where we are able to scale up sustainability finance. Okay, and of course, we have been involved in such conversations, Nestor, as you mentioned, in ASEAN. In fact, just in Malaysia, we are working with the SCDG as a SCDG adopter. Okay, so we are part of the CM Square SCDG adopter program. We are also involved in various taxonomy discussions with the JC3. And on the ASEAN level, we are also operating the ASEAN Single Access Point for ESG Data initiative, and also a United Nations SCAP, which is actually where I met Tan Sri, by the way, and at the ESBN Sustainable Business Network Green Deal initiative. So there's a lot of initiatives in the region, which is empowering companies to get started, providing them the incentives and the recognition, and therefore, okay, enabling the sustainable finance community or the banks to be able to use this data, okay, and scale up their financing.
Thank you for that. Maybe from a human capital perspective, you may want to share on the current state of integration. Over to you, Panit.
Thank you. So in terms of integration between social work as well as the ESG governance and so on, I'm seeing in Malaysia especially, it's a very welcoming, as I see a lot of sustainability projects are being carried out by not only financial institutions, the other corporate organizations as well. But what I want to emphasize is it has to be need-based, actually. So we have to really look into what are the current needs of the people. As for example, Dr. said, food security, poverty, we have social protection and so on. So these are the needs that we, as a research organization, they will be usually map and so on. So when we do need-based intervention, it's going to have a sustainable impact among the people, the beneficiaries that we are really working on. So when projects are actually according to the need, and then there is a sustainability element, and there is a partner involved. So apart from we as a financial organization, we have also some local partners involved in doing the monitoring, in doing the follow-up, in doing the hand-holding. Then the project that we funded will be a very successful and sustainable project. So in terms of integration among these two, the needs of the people as well as the needs of the organizations per se. So this has to be there. There must be a partner, local partner, and there must be a kind of a proper follow-up and so on. I can give you one example, like we developed a project in Baling in 2021 with housewives. So then it's a sewing project. And today they're actually earning per month 12,000 Malaysian ringgit just by sewing in Baling, okay, in one of the northern rural place. They're actually earning monthly 12,000 through corporate orders. It's really corporate orders. So I again thank the corporate world for the orders that you are giving to these women, and they're able to come out from poverty. They're actually now sitting in T20, M40 plus T20, with that monthly 12,000 ringgit worth of earning. And they're now forming cooperative among them. And what is next is microfinance. Okay, so this is where the integration is coming in with the financial institution and so on. So I'm seeing that when something is done based on need, with proper partnership and proper sustainability element, then the project will be very success. I call it as a project, but it's going to be very humanistic in a way that what we do as a ESG contribution to society.
Absolutely,
Yeah.
absolutely. Thank you for that, Panish. So purposeful-led collaboration and partnerships. Excellent, excellent. Moving over to Irina then. All right. So let's hear a little bit of the integration component, right, across, of course, with the banking and finance sector. And if you'd like, you could also add on elements of how you may have seen successful strategies or initiatives that have also come along that same way. Over to you.
Thanks, Kasri. I think few examples that I can share. If you look at EY Entrepreneur of the Year, we've actually recognized quite a number of very unique entrepreneurs, and some are going towards green economy. One is, if you can remember, and this is very interesting because as we run through the journey with them, we also ask these clients of those we recognize, where are your pain points with bankers? And that's the most interesting.
That's a great question.
Yes, that's always my question every time when I meet entrepreneur. Who are your bankers? What are they offering? Have they asked you sustainable finance? Any challenges that you're seeing? So after talking to quite a number, we sort of have a very clear view on what's happening. So two entrepreneurs that I would like to highlight, which have been driving not just clear areas. One is iHandao, whereby they actually develop heat recycling energy, and they've gotten huge contracts. So when I ask this question, I think the key thing is a lot of companies coming out from COVID-19 have suffered an impact on their financials. And because of that, it's very hard to get financing, especially when you have a huge COVID downturn. Getting credit approvals is very difficult. And I'm sure a lot of businesses, SMEs, face that challenge. And this is where it has hindered a lot of growth. Not only they are not able to recover, they are not able to finance their growth. Second part is when being asked, whether their RMs or relationship managers is able to give them differentiated products, we still see a huge gap. It's very much at the corporate level, but when it comes to some of the smaller loans and deals, the feedback would be like, these LCs and all this does not work for me. We need proper financing. So the ability of RMs to variate how to do a differentiated financing, that competency is a challenge that we need to address. That means, can we variate the kind of financing schemes and products? So more and more, we are seeing a lot of the PEs, VCs coming in for the bridging of it. Same as yesterday, I was at Bintang Capital Forum, and I was happy to open and I saw iHandao being one of the ones that they finance. So, I mean, to be honest, I think they also talk about impact reporting. So while they are financing iHandao, they also require iHandao to give me how much of emissions that you have avoided from deploying energy efficiency circularity. So that's one. The other one is one of the entrepreneurs that I had a benefit to also interview in the master category was Fat Hopes, Sustainable Aviation Fuel from Cooking Oil. So yesterday, Nick Nasmi have also announced that, they are partnership and looking at SAF fuels in this area. So I understand the pain points, and of course I ask again, who are your bankers? Who are your financiers? Who have helped you? And who have turned away from you? So this was where it also comes back to what are the challenges that they are seeing, who's giving preferential rates, and who actually take time to understand the business model. We do see that while a lot of financial institutions want certainty, and that's important because to a certain extent, we are putting our deposits in bank, right? We want to make sure that whatever credit that they approve go through a certain rigor. But what we are seeing is there need to be a certain understanding that as what Doc mentioned, the bridging, the financing, and what are the roles of different financiers ecosystem comes together. So these are the parts where I think if we are able to tackle that in a coordinated manner, I'm sure our corporates will be able, or the SME will be able to take that leap into the next part.
Lovely, lovely. Thanks for that sharing, Arina. So that's some good insights for our finance and banking audience here today on some of the pain points, right, that typically is being faced by organizations. Are there any questions that's coming from the floor for our panelists today? Just don't have anything on the screen yet. Unless there is, please do send us. It'll be a good time to take some questions. All right. Okay, so while we continue to await, let's talk about, maybe I'll circle back to this time round, Dr. Mazlan, Ben, and then we'll split over the second areas of question. Something I did address with Arina a while ago, which is strategy. So I just want to understand from your experience, what are some of the most impactful strategy or initiatives, right, that organizations have done to promote sustainability and ESG principles?
From my past experience, only these 3 strategies. The first, like it or not, we must do it based on smart partnerships with government, private, academia, public at large. All the fabric of the society must work together. I give you one example. A lot of people misunderstanding zakat. Yes, it's very normal in our society. Zakat, that means collection that raised by Majlis Agama Islam. I give you one example, Selangor, for example. I spoke to the CEO of Lembaga Zakat Selangor, Haji Sabin, what is your KPI for this year? So he told me, boss, my KPI for this year for Zakat Selangor, 1.3 billion. I said, why 1.3 billion? 1.3 billion. I said, why 1.3 billion? I give you KPI 2 billion. I said, hey, Dr. Mazlan, how can you outsider, you can decide for my KPI? Simple. Based on database, I know the potential of individual donors. They are entitled to donate, to contribute for zakat, 2 billion. You check your database. True enough. He come back to me, yes, individually should contribute zakat for this year is 2 billion instead of 1.3. I said, there is only for individual. How about corporate? Corporate, you can easily reach 5 billion. He said, where do you get that 5 billion? I said, for example, very simple. Today, a lot of people don't know. When they contribute zakat, they are creating circular economy. Let me share with you this secret. I don't mind. Yeah, I want to stand because I want to share important message. As a corporate, Professor Datuk Chin, we pay corporate tax 24%, correct? As general. So out of 100 million, taxable 24. When you pay tax 24, as a corporate, you get back any benefit? Not really. It's hangos, it's burned. But the moment you follow my formula, 60-40, 60 you pay tax, 40 you pay zakat, what will happen to your company? Now, the secret. Let's say 40% around 6 million. 6 million, when you pay zakat, you can recoup back 50%. That means you can recoup back about 3 million. In your organization, even Maybank, for example, I like to teach Datuk Nora because I attended our conference in Security Commission, we talked about the same topic. In Maybank, don't we have our own asnaf? Yes. So instead of we have to use commercial, this is the formula, use social finance. So the money going around the circle, which is a lot. Which is a lot, right? Not only we get the tax relief, we get the tax rebate, on top of that we get our own circular economy. So the point here, what is the formula moving forward to ensure ESG are fully implemented in our society, in our country, in our region. Smart partnership. That's the first. Imagine Majlis Agama Islam have billions of dollars. And I would like to inform everyone, Majlis Agama Islam is not meant for Muslim alone. Again, I want to correct the perception. Zakat is for all. Wakaf is for all. Yeah, please make it. Professor Dato, yes, use it. It's big potential. But of course, as a banker, as an entrepreneur, the second formula is all about monetization. You must know how to financial engineer our whatever project. If we don't know how to monetize, then goes all the waste energy. So monetization, I hope I have one session just to share what is monetization. But you can meet our panel here to share what is monetization. But last but not least is all about captive. Captive, which is where all the while we always look up resources, talent from outside our ecosystem. Whereas look at here, these are all our talent. We must leverage on each other. We must value, appreciate the talent that we have so that we can come up with synergy. Thank you.
Thank you, Dr. Maslan. Over to you, Ben.
Thanks. So as the founder of a tech company, I will always say every strategy should be based on science. Yep. And that's where, the core of us, our being, is that we want to be able to provide the science, the data, okay, the facts, so that companies can make the sound decision making. Yep. Yeah. And of course, our partnering advisors can give them the right advice so that they can develop the real strategy towards net zero. So I think that's our role. But having said that, technology still needs to be operated by the right talent. Yeah, so that's why I agree with Dr. Maslan that ecosystem partnerships and of course having the right people or the talent, which I believe is also our next panel, okay, to be able to operate the technology will therefore be able to amplify the results for better. Yep. So I think in a nutshell, I believe any strategy should be based on technology, science, okay, and of course driven by the right people. Yep.
Thanks, Ben. Right, would you want to add on to? Panil,
Okay.
go ahead.
Because
Yes.
I agree with Doctor just now, the smart partnership, Doctor, yes, because we also like emphasizing the corporates, financial sector and so on to actually partner with already established non-governmental organizations, cooperatives and so on, who already have some successful projects ongoing, where the further development, that's where the corporate sector is coming in, like for example, the Baling project just now. Once the cooperative is formed, then the next phase will be microfinancing and so on. That's where you can actually leverage, I'm using the word leverage, on successfully running projects. Not a project that it is freshly starting and there is a stumbling block and so on. So you can partner with all these people, like for example, APPGM. We have about 512 partners. 70% of them running economic development projects. So you can actually really partner with them. Second is, as I said just now, the need-based approach. So we can actually tailor-make what really the organization is wanted to do, for example, environmental intervention and so on. So we can actually partner with programs and projects that are actually specifically addressing such things like, for example, gravity water, water supply to a village, maybe in Sabah and Sarawak. So we use gravity water. We can use pico solar electricity and so on. So that will really revitalize the whole village in terms of livelihood as well as economy. Once the water supply is there, they can actually start their economical activities and so on. So we can really tailor-make on existing projects and leverage so that the further success can be yours as an organization. So that's what I wanted to share.
Very much, yeah. Thanks for that. If you want to add any more, Rina, in fact, your slides did cover some of these impactful initiative strategies.
Yeah.
Anything you want to add? Go ahead.
I think, while we shouldn't be waiting for policy makers and regulators to make things happen, definitely there are strategies on smart partnerships which can happen, of course, with regulators coming in, it's more helpful. For example, we have the Climate Change Act at the government that will come by 2025. But the question that we have not answered today is who's going to track emissions? And which are the sectors or companies that will be exposed, not internally, but externally in the trade market in terms of the kind of taxonomy. So getting data is already a challenge, and that's something we've put forth to policymakers. But remember, we also have the SECRES platform and infrastructure. Nothing stops us from being able to have emissions being monitored in the most seamless and efficient way, rather than we have all banks trying to hunt for emission numbers and calculate emission numbers. So that's one smart partnerships that we can consider. Second part is, I think, reality is, I think we have to take a closer look at what's happening on the ground. If we are looking at reality, there are entrepreneurs and SMEs that requires financing. And the question is, are they getting the kind of exemptions, allowances, and support incentives that they are getting? Or we have another population of SMEs that doesn't want to graduate from SME because of the existing incentives. So for those that are looking at development and looking at SMEs, quite a number have observed two differentiated entrepreneurs and SME. One is maximizing and doesn't want to graduate. One is doesn't have sufficient support. So these two strategies comes hand in hand because we only have that much of capital deployment to support that too. So we need to relook back at how we have in the past considered social, environmental and governance when we go into targeted financing. So this is what I think we can do better.
Absolutely. Thanks for that sharing, Arina. All right. Happy to take questions. Yes, please. We have a question from the floor, please.
Yeah. Hi, my name is Rita. I'm from Senang Pe. Okay, I just want to share my experience about the smart partnership because I am also a member of Sustainability Network. Okay, and what we did, okay, what Senang Pe did with North Corridor Economic Region, okay, what they did, they took 20 pilot entrepreneurs. It is micro that they are using totally a manual, no online existence at all, nothing. So what we did is that we partner with Sustainability Network, okay, we as a payment gateway provider, and then we elevate these entrepreneurs from manual to digitalization. But when you talk about sustainability, ESG, for me, based on my experience, is for them is too big. So we start off, it must be, they need to be coached, and we need to, since they are micros, we need to start from the P5. They already have a good product and the process, and then the people, yes. And it's just a little bit tuning in terms of the planet and the prosperity, then I think they can fly. That is my opinion. And what we did, yeah? Okay, example like there is a lady that she sells lasagna and cakes, home-based. Okay, then this program is a 6 months program under NCER and the Think Plus Academy, the one that handled the sustainability. So what we did is we coach them, means we have to table out, start from the beginning, okay, on their businesses. And then what we teach them is that, okay, means like tune in a little bit on their financing and everything, but they are making 1,000 to 2,000 a month, okay? But then when what we teach to them is just that we have a payment gateway. Because all this, while they have been using all this manual thing, money is there, keep coming in, but all is manual. So they lost track because the same monies that goes in for the company, there is the things that go out. Correct. So we teach them about digitalization, the payment, how they can receive all the online channels, online payments, and then a little bit of digital marketing. And then there is an example like the lasagna. The lasagna lady, we call it. Okay, she elevated her business from 2,000 monthly to 4,000. How she did it? When she used the payment gateway, she can do a pre-order. So it's okay because there is a link that you just need to give to your network, and then you the blast inside the group. Okay, next week, okay, I'm going to bake lasagna. And then she already got people paying via online. So from there, she has already got enough money to roll for her business. So I think you have for these kind of things, but sorry to say, there is no financial institution that come in. At that time, we did have a summit, the Northern Region Summit in November, if I'm not mistaken. But we don't see any financial institution that really there means for micro entrepreneurs, okay, to get advice. So there is some sharing that can then from our payment gateway side.
Thank you. Thank you so much. Great example on the need, clearly on the need for microfinancing. Anyone else? We can probably take one. Yeah, we're actually very close to time. No one else? Yeah, so with that, unfortunately, we don't have the benefit of time. We will bring this panel session to close. A big thank you and a round of applause to our panelists for their insightful sharing. Thank you all. Thank you.
Thank you, Ms.